Welcome to the Untangling Web3 podcast, your go-to hub to learn insights and the latest developments in the wild and wonderful world of Web3. I'm Alec Burns.
And I'm Jack Davies. Tune in each week as we navigate and explore the rapidly emerging landscape of the Web3 technologies, projects, and ideas that are shaping the future of the internet.
We'll be talking to the best and brightest in the industry to keep uncovering insights,
so that hopefully we can all learn together on our journey to untangle Web3. Welcome to another episode of the Untangling Web3 podcast. Today, we're delighted to be joined on the show by Mona Tiesler. Mona is a venture capital investor focused on investments in Web3 and startups utilizing blockchain technology. She's currently an investment manager at Tokentus Investment, a German VC firm specializing in funding Web3 infrastructure and financial services companies. Mona is also a co-founder of Timely, a click and collect food marketplace, is a member of Global Women in VC, and holds an MBA from the European Institute of Business Administration. So without further ado, welcome, Mona. Lovely to have you.
Hi, thank you very much.
Hey, Mona, it's very exciting to have you here. How are you doing today?
Good, very well. How are you guys?
I'm great, thank you. I'm very well. I'm super excited about this episode, to be honest.
Yeah, very well, thank you. It's funny how often people don't ask us how we are, so it's nice for once to get that question back. Thank you.
So, Mona, why don't we kick off? Venture capital, it's a word that is used everywhere, but I think very few people actually know what it means. I mean, even I, I've had some experience with venture capitalists in the past, and I don't think I know what it means. So what is venture capital?
Well, I would say it's the process of investing in startups, so young businesses that, as a venture capitalist, you believe have long-term growth potential. What that means is essentially a venture capital investor usually takes money that is put into a fund from other investors and then uses his or her knowledge, research, expertise to find small businesses or startups in a specific area. In my case, it's Web3/blockchain, to kind of figure out which are the truffles, the best startups in the space, and then gives them money in order for them to grow, such as, hire or do marketing or hire a developer team to produce the product as such, and then hopefully, grow to be the next big, for example, Google. And therefore, when then they exit or they do an IPO or they're bought, then all the people that put in money in the first place get a nice chunk of money back. So hopefully much more than they put in initially.
Okay, sure. Yeah, that makes a lot. That's kind of tallies of what my understanding was. And maybe you could also situate venture capital in terms of the other different funding models that maybe explain a bit about the kind of size of the ticket of investment you might make, typically, because I know there are lots of different ways that startup can get money. They might have some seed capital, they might go through venture capital, or even, get acquired by a private equity firm. So maybe if you could explain a bit about how venture capital differs from the other mechanisms of funding, that would be really interesting.
Well, so first of all, I mean, as a very young startup, you do have a few different options. You could either, take angel investor money. So angel investors are usually individuals that have some private funding to distribute. So they might want to invest in startups in a specific area. Also in terms of, potentially might be very helpful for the startup as an advisor and help the startup grow. So then you give away some of your equity to these angel investors. These usually come in really early and hopefully are really, really helpful to the founders. not just with money, but also with their expertise or, knowledge and wisdom. Then you have grants. So there are a variety of different grants. You can get grants from the government. You can get grants from various organizations. And in the Web3 space, a lot of the ecosystems or, foundations have grant programs, which you can also apply to if you have, some sort of relationship to the layer one blockchain. For example, you're building on Ethereum. There's an Ethereum foundation that may give you a grant. And in that case, you wouldn't have to give away any equity. Then, of course, there's debt financing. So when you literally take out a loan, again, you don't have to give away any equity, but of course, you have to pay back that loan. So you're putting yourself in debt, which is often not done by startups, at least that I see, because they would prefer not to be in debt, right? But again, that's maybe a tactic, depending on the type of startup you have, that might be worth considering. Then, of course, you have things like crowdfunding, where you might all know Kickstarter or the likes. If you have a product, for example, and you want to raise money for that, then you can have everyone essentially on that platform invest as little as maybe 10 pounds, euros, dollars, whatever, and be part of your growth journey as a startup. And that's also an interesting way. And then you also have to give equity, but you give away usually a package of equity to a platform, and they distribute it to all the little investors that you then have, and you build a community. And then you, of course, VC funding, which I just explained before. Here again, you give away equity, but hopefully you also get a lot of support from the VC, the venture capital firm that invested in you through their network, their other portfolio companies, in order to enhance your potential partnerships, etc.
Yeah, it's interesting that you mentioned crowdfunding. I mean, I don't want to talk too much about it because we're talking about VC right now, but that's one of like the main examples that people give of like Web3 based smart contracts kind of having these, they typically call them DAOs, where everyone can contribute to something online, and you remove middlemen, and you kind of get a level of efficiency that you would typically get from like, a crowdsourcing platform, and actually remove the middlemen in that. But you've hinted at it, I think, a lot there. What is the role that you think VC plays in society? What benefit does it add? I think it's kind of, you've kind of explained it in some ways there, but could you like define it for us, please?
Absolutely. I mean, obviously there are also cons, right? It's not all perfect, but I would say in terms of pros and benefits, to answer your question directly, it's often really not just funding. And obviously funding is important, right? Because if you're a startup and you want to build your idea, you often don't come in with a lot of personal funds. And maybe they're also gobbled up pretty quickly. And if you want to hire the best people into your team, if you want to use tools that, make your work processes more efficient, they often all cost money. So a VC giving you a decent amount of money is, of course, a benefit that it provides. However, the big benefit that, in my opinion, a venture capital fund should provide to its startups in its portfolio is more than that. It's knowledge, it's support, it's a sparings partner. It's also access to the other portfolios in their portfolio. So in the other portfolios they've invested in, to make it a bit clearer, are kind of all part of an ecosystem, right? And if you are kind of coming in as a new company in that portfolio of this VC, they should be able to provide you with introductions, with the ability to easily get access to mentoring or to speak to other companies that are potentially a bit further along in their journey in your portfolio. But even beyond that, to other investors in your network, to other companies in your network, to shareholders or limited partners that have invested into the fund that might have a vested interest in helping the startup grow. A VC should be able to make these connections and help you, suggest to you pathways for growth and enable you to get in contact with beneficial partners.
Yeah. Does that mean there's a kind of is it quite competitive to be a venture capitalist? Are you like always pitching for, because I've always thought of venture capitalists, okay, there must be a bunch of startups pitching to you guys, saying like, oh, please fund me. But actually, if there's lots of different VCs with these different networks and different things they could offer? Is there a lot of competition for you guys as well?
It's an interesting question because I would argue, and I used to be a consultant, and that used to be my favorite phrase. It depends. Um, And it depends a little bit on the market conditions, right?
Mm.
In the Web3 space at the moment, I would say we have a bear market, so not a great environment. And a lot of funding has dried up. So really, startups are really struggling to fundraise. So at the moment for a VC, it's a really good time to invest because valuations are lower and there's not as much competition. The hype is gone. You have more time to do due diligence. You have more options to get into pretty much any deal that you like to a certain degree. So at the moment is more the startups pitching the VCs and hoping that they will receive investment because money has dried up, right? So there's actually a lot more supply in terms of startups than demand in terms of VCs wanting or being able to put lots of money into the market, even though they should be, and a lot of them are, because this is a really good time to invest because the upside potential when the next bull
Yeah.
market comes is really high. But of course, when there's a bull market, so when the every money is being poured in and there's this hype, so let's say 2021, the last one, you could argue, everyone was so excited about Web3. There was right now we're seeing a meme coin frenzy, but back then, we've had NFTs and games and metaverse and DeFi and everything exploding. And here a new layer one blockchain and here a layer two and whatever. And in that respect, I would say it was a lot of the time that VCs couldn't get into deals because they were oversubscribed and decisions had to be basically made overnight or even faster if a VC wants to be participating in this current funding round. So I would argue in some cases, not all, but oftentimes in a more bullish market sentiment, the startups actually have the power, if they're very kind of popular startups, to choose which investors they want in, which, to be fair, I think is probably obviously not my preferred way of living, but it is the better situation for the startup because I think the startup should have the ability to also do their due diligence on the VC, right? Because they should not give away equity, ideally, to venture capital funds that are not helping them and not providing them with those intros and not providing them with, being a sparring partner and a real, addition to the team, but just a money giver and just kind of a marketing vehicle, because I don't think that that's enough.
Yeah, it's really interesting that you say that about the last bull market and how much hype there was around certain things. Like I remember there being this period where it seemed that if you just put the word Solana in your pitch deck, then you were definitely going to get a lot of money thrown at you. But maybe these are from people who are, more opportunistic funders who aren't necessarily going to be the best business partner. They're not looking at the long term. They were just, having a bet on the fact that Solana was going to grow, right?
Yeah, and I mean, right now you could argue that AI is that word, right? Artificial intelligence, that phrase that is often now put on pitch decks because there's a little bit more interest in AI and ChatGPT and Bard and all the other, tools, Midjourney, etc., that are used by the broad range of people across, just Web2 internet users seem to have, created again a hype cycle around AI. So also AI, I would say, is also a building block of Web3. It's not just the blockchain, right? There's also artificial intelligence, in my opinion, that is a building block within creating the new or the next era of the internet. And therefore, a lot of the pitch decks were changed from being something related with metaverse, which seems to be a complete no-no right now. To now it's an AI virtual reality startup rather than a metaverse startup, and all of a sudden there's again interest. So it's an interesting market to be in, because in the end, there's very, very smart people in this industry, but of course, it's a very young industry. So I would argue most people, or maybe even nobody, knows um, how the future is going to look. So everyone has an opinion. And of
Mm.
course, the popular opinion is often a little bit easier to justify than a completely rogue opinion in a situation where you don't have that much data to base your opinion on.
Yeah, I'm really glad that you brought up AI. Like, we just recorded our episode on AI and the overlaps between AI and Web3. And like you say, there was a lot of hype, a lot of speculation around Web3, but some of the benefits weren't that tangible. It was quite hard because a lot of the kind of the field concentrate on the technology at the kind of the detriment of the user focus and the user centricity. And that is something that we saw with the boom of ChatGPT. They focus so much on user centricity, and that is why we think this is a massive shift, because everyday users can really like understand and gain the benefits very easily. And we do want to come to the AI versus Web3 aspect a bit later, but obviously this is a Web3 podcast. We brought you on here because you're a VC in the Web3 space, and you've hinted and talked about it a little bit. But what does Web3 VC look like? What are the kind of things that you invest in, related to Web3 right now?
Yeah, so I mean, we are kind of specific in some ways. So not every VC will give you the same answer.
Mhm.
But for Tokentis investment, it's really at the moment a focus very much on financial services, Web3 infrastructure, as
Mhm.
well as core infrastructure players. The reason for that is that Tokentis has a lot of shareholders, and a lot of these shareholders are also part of the German banking and institutional network, right? And very senior, as well as, leadership,
Mhm.
board level member positions. Therefore, the network that we can provide into the German as well as DACH region market is very, very beneficial for the startups. So we try to invest in Web3 players, blockchain related startups that are utilizing blockchain technology, is what I mean with that,
Mhm.
that are kind of playing in an area where our network, our expertise really has a value add to them, which means we don't look at most of the time, as a broad rule of thumb, we don't really look at entertainment. So gaming, NFT related marketplaces, for example, or things like social.
Mm.
But I think these are still really, really interesting areas. And I think that many, many VCs in the Web3 space, do have a focus on these more, let's say,
Yeah.
entertainment and retail. But we focus really more on the infrastructure specifically for financial services
Okay.
area.
And it's interesting because I don't know if it's that maybe like financial services and say, I don't know, these bastions of old are a bit more risk averse. And we kind of, in the episodes we recorded around NFTs and tokenization, all this kind of stuff, you see that the gaming sector is really pushing hard. And I don't know if it's because maybe the benefits are more tangible. People kind of understand the value of owning tokens in games. So it's a bit more relatable for everyday users. But do you kind of like look ahead and say, okay, even though we're not investing in these things right now in the gaming sector, I wonder if in 5-10 years, the same principles that apply in gaming right now to NFTs will work in the financial sector as well.
It's a good question. I mean, I do think that, gaming is, or gamification, let's say,
Mm.
is um, a strong potential for wider adoption
Hmm.
of, blockchain technology and decentralization, and, you know, uh, the payments related aspect of in-game purchases through
Hmm.
crypto, and making this all more efficient, making it immediate, making it more interesting for the players as well.
Yeah.
So I think that that's definitely the case, and I think it's coming more and more. My current opinion, however, is that the current Web3 games, at least that I've seen, are not very fun to play. They're
Yeah.
not very good. They don't rival, right, the
Mm.
Web2 games that are out there and that are constantly evolving. But even the old ones that, were played 10 years ago, they're still played, right? Because people are nostalgic about them. They love them. And I think that that's a little bit it's difficult to rival that with the current level in the Web3 space. However, it is constantly evolving. It's not something that I focus my time on a lot, but I obviously do see a bit of this, and I do see
Yeah.
that it's getting better and better. And I do think that there's a lot of overlap. My vision for the future would, of course, be that the blockchain technology powers a lot of
Mm.
underlying verticals, right? From the financial services space, so really making payments more efficient, cross-border payments, settlement, etc., right? All of that, eradicating a lot of fraud and illicit
Mhm.
activities through cash.
Yeah.
And I think there's so much potential there, and also creating so much efficiencies, right? Because banks are relatively rigid in their ways of
Yeah.
working. There's a lot of inefficiencies. So this technology can actually enhance a lot of that is done in the financial services industry. But that, of course, also then means in other verticals, such as, social and things
Mhm.
like influencers and royalties in the music industry, for example, or in the arts world in general. There's a lot of ability here for the blockchain technology and this whole ethos of decentralization, and basically rewarding those who actually created, right, that piece of art or
Yeah.
that piece of music in a fair way, is also something that I think blockchain technology can power and make the future really really interesting,
Yeah.
and
Definitely.
create a lot of efficiencies. And gaming as well, right? Gaming,
Yeah.
we have so many use cases for gaming, for gamification, and I think we're moving in those directions. But my honest opinion is that we're not there yet, right? And I
Yeah.
think before we're at a place where we're, from a regulatory standpoint, um, in a situation, or yeah, in the right my frame of mind,
Mhm.
and knowledge and education level, I think we probably have like 5 to 10 years to go, right, before a lot of these things are actually, a lot of these verticals or industries are actually powered by blockchain.
Yeah, definitely. I think you're completely right there. The kind of the premise or the paradigm shift that blockchain introduces across all sectors is the removal of inefficiencies, right? The removal of unnecessary intermediaries. And like you say, although NFTs in gaming right now, they might not see the applications to the financial sector immediately. The underlying principle is the same. It's the removal of inefficiencies. And I think you're totally right. Like all of those we kind of realized eventually in almost every sector. And I'm glad that you spoke about, the Web 2 versus Web 3 in gaming. I'm a massive Web 2 gamer, and you're completely right. I'm not switching over to Web 3 games anytime soon, even if I fundamentally like what they're offering. But to relate it back to your world, how does, VC investing in Web 3 differ, do you think, from VC investing in Web 2? Is there a difference in mindset? Is there a difference in approach?
I would say absolutely. And I think there's a few reasons. The first reason is essentially, you're in the Web3 space, you have more than one investment vehicle or
Hmm.
focus point. You have equity, but you also have tokens. And that's a fundamental difference, right? Because in a Web2 investment, you essentially get shares in a startup for the amount of money that you put in based on a certain valuation that is
Hmm.
usually calculated by, for example, cash flows, right?
Yeah.
Multiple of cash flows. And yeah, that's pretty straightforward. It's been done for many, many years. We all
Mm.
know how it works. But now we have this new thing in the Web3 space, which are tokens, which is essentially, the native cryptocurrency of the project, or the
Mm.
cryptocurrency used by the project, let's say, in order as part of their decentralized nature, of its
Mhm.
decentralized nature. So as an investor, often you have the fundamental question you have to ask yourself: where is the value of this project accrued?
Mhm.
Is the value accrued in the equity? So, for example, it's a the IP rights are sitting in the central entity, or the team is really the biggest maybe value add, and there is no real token component with this because it's an API or something to connect blockchains, for example, or something like that, right? You find reasons for what makes the value be held in the equity. But then, of course, a lot of these projects that are specifically decentralized, and I know we talked about DAOs very briefly at the beginning, there you could argue the governance, so the voting potential, your actual ability to contribute to the project in a DAO, for example, as well as in any project, for example, also in the decentralized finance space, a lot of the argument is that the actual value is accrued in the token, and because that is used as the payment method within the space, right, within that project. That's where the yield is generated, for example, and what you receive in return for staking your coins, your tokens within the protocol, etc., etc. I don't want to get too technical because I know we're trying to keep this relatively easily explainable. But the crux of my answer here is you have two different things in the Web3 space as a VC investor that you can invest in, and they are fundamentally different. And there's a question about where is the value coming from for this project? Is it equity? Is it token? Is it both? Should you participate in both equity and tokens in order to really make your investment the most, valuable, the most successful? And that's something that Web2 investors don't have to spend their time evaluating.
That's really interesting, right? Because you're kind of investing in when you talk about the token side, and we can get into kind of the difference between, are you investing in something that's purely an exchange token, or is it a utility token? And then, as you're saying, you might only invest in something that you can perceive utility for. That's a whole different consideration to what you have in a normal investment. You're not just betting on the company, you're also betting potentially on the infrastructure. If a company is built purely on Ethereum or purely on Solana, then you're also in some sense taking a bet on the long-term health of that underlying blockchain. I mean, where does it sit for you at Tokentus? Is there a sweet spot where you tend to invest between the two options?
So we are kind of an equity first investor still. So we do always want some equity in the company. But we then also do so-called token warrants, so options for future purchase of tokens. Often the case is that a startup doesn't have a token yet, right? When we invest in them, which is pre-seed to Series A, but a lot of the pre-seed and seed companies, they are only in the process of thinking about this pretty difficult question around how to create tokenomics, so token economics that are actually going to be valuable and work, right? So often they say they have an idea, they maybe already have a platform of some sorts, but they do not have the token economy completely mapped out. So what we do is then invest in the equity, have the option for the token warrant, and then help them think about this, as well as then have the later option as a benefit to invest into the token when it is launched or before it is launched in a so-called private sale. But then a lot of the time, we also, for example, in older or later stage companies, we do still want some equity first, but then we might buy the token as well, or we might do follow-on rounds into the token. So the first round, we might have an equity, but then, we might say when they're raising again, we support them again and invest in the token, or we invest in the next round. You know what I mean? So it depends a little bit. But of course, there are other VCs in the Web3 space that are purely focused on tokens. And a big argument that they often have is the fact that it's much easier to exit that position as well. So not in terms of pumping and dumping, that should never be the value add, that should never be the focus, but more in terms of, if you've invested 1 million, for example, and then the token goes up 10x, and all of a sudden your million is worth 10 million, you might sell 5 million of that, bring it back into your pot of money and invest it in further startups, or pay out, your limited partners, the people that gave you money in the first place to invest. So that's of course a good argument and a value add this industry has. You don't have to wait as long if you invest in tokens, not always, but often, as when you invest in equity, when you need a for example, a buyout or an IPO in order to receive your return on investment, or sell them, or
Mm.
secondaries or something like that. But we do like equity because we are coming from a traditional background, and it is something that we can understand better, I would say, as well as the tokens don't necessarily give you legal rights um, to the product or the company that
Mm.
kind of issued the tokens in the first place, which again, it depends on the project, but the project that we tend to invest in, the value is often in the central entity, where the IP lies as well.
Yeah, that makes sense. It's really interesting, actually. I hadn't considered that, the advantage for investors of the token side, but it sounds like that might be a downside for the actual projects themselves. If the investment is highly liquid, someone could take all their money out very quickly if they like the increase in price. Is that like a source of instability then for those kind of projects?
I mean, the projects usually have so-called vesting schedules, right? So that you don't you're not, as soon as the tokens are listed, everybody who bought into them previously can immediately sell them. But they have like 2 years, for example, vesting schedules. I mean, these vary, but so you basically commit to not selling for 2 years. But then these vesting schedules over time they end, right? And then of course, once these abilities to sell open up to your investors, then really, really a good investor should then not just throw all the tokens back on the market, and therefore, dump the tokens, and therefore slash the price, and potentially
Yeah.
really, really hurt the project and other investors and other believers and partners in the project. But of course, and that does happen, not necessarily from VCs or only from VCs, but just from investors in this space, because it is still a speculative asset, right?
Mm.
So of course, people want to make money a lot of the times in this space, but a good VC, usually would do this very strategically and exit their position in a strategic manner that does not hurt the company, and that does not, that's not noticeable to other investors and the company itself. But of course, the world is not perfect.
Mm.
Yeah, that makes sense. I maybe want to spend a bit of time talking about, you've mentioned infrastructure is your focus at Tokenders, and for me that's really interesting because, I think you're getting at the idea of blockchain and Web3 as utility, as almost sometimes we would describe it as like plumbing. It's going to be this infrastructure like the internet, like TCP/IP. It's this thing that is long and stable and powers everything we do on the internet, right? And I think
Yeah.
maybe you have a similar thesis at Tokentis to what we think is that blockchain will be this underlying protocol that powers all sorts of things. So maybe if you can I describe, when you say you're looking at investments on the infrastructure side, what kind of thing constitutes infrastructure in your book?
Yeah, it's a good question. So I think primarily, for us, it is a little bit in this financial services area aspect, because our value add of our network, of our knowledge lies, within that space. However, we also, I would say, invest in infrastructure players such as um, platforms that enable, value creation, or problem solving, such as scalability, right? Or
Mm.
data management, or even community management, or providing banking abilities for crypto startups, or enabling different blockchains to be able to talk to each other, right? Through
Mhm.
an API that enables the connection between blockchains, and then you are able to, for example, sell tokenized assets between different networks, just like the Swift network right now allows us to send money between different banks, right? Different bank accounts.
Mhm.
So I would say those that constitutes infrastructure for me. Now, of course, the broader definition that most people I think would say is layer one. So basically, the blockchain base layers. They are from, let's put it, from layer zeros to layer ones to layer
Mhm.
twos to layer threes, and to, for example, bridges, which are often hacked, but you know what I mean. Essentially, building blocks or aspects around, solving the problems about MEV, maximum extractable value, or solving zero knowledge um, technology, solving problems like digital identity or scalability issues. Of course, there are also quite a few issues around that, but let's not get into that. But building blocks, new technological advancements, roll-ups, different types of roll-ups, what are they used for?
Yeah.
Those I would say all of those aspects that I've just mentioned, and at least my personal definition, constitute as infrastructure of the Web3 space.
So you've talked about like investing mostly or around projects for financial services targeted at financial services, and I want to speak about challenges in the Web3 space generally. But before we get there, what are some of the specific challenges you find around Web3 projects specifically targeted towards financial services? You mentioned a bit about regulation, risk aversion, these things. Like what's the experience you've had with Web3 projects in these sectors?
My honest opinion here is that the feeling I get is like everybody wants to have a toe in the door. It's not a foot, it's just the toe. And
Mm,
everyone's kind of investing a little bit, right? We're seeing BlackRock with a big investment in Circle
mhm,
quite a while ago when, Larry Fink was still saying blockchain or crypto is terrible. Bitcoin,
mm.
oh God. And then now he's basically the CMO advocating but let's not go there. But anyways, long story short, I mean, a lot of the big banks, a lot of the financial services institutions, they have done investments into blockchain powered or blockchain related projects. They have invested in tech aspects around that. Maybe not a DAO, but
Mm,
something that enables payments, faster payments or efficiency, and therefore cost savings, right?
mhm,
And I think that we've seen that quite a lot. But of course, there is still a bit of this. We do not want to be associated with the crypto space because of previous massive scandals, which are obviously very detrimental, such as FTX, such as Celsius, such as Three Arrows Capital, you name it, right? I could keep on listing things, but we don't want to be reminded of all the negatives. But essentially, there's also been a few difficulties, and without a good, valuable framework in the regulatory sense, it's very hard, I think, for large institutions that the general public puts their trust in
mm,
to go head first and more than a toe into this space, because it's a storming and norming kind of phase we're still in, right? We're still trying to find our feet. We're still trying to get rid of the bad actors. We're still trying to find the right regulatory environment. We're still trying to educate and figure out, how do you even educate? How do you make simple? What
mhm.
do people need to know versus not know about what is underlying and powering, new apps, for example? And I think that that's a lot of this still needs to grow and get better and be more efficient and more effective and have maybe more clever, you know, thought processes, minds, time spent on it before big institutions, specifically financial institutions, actually can say, we advocate for this tech, we advocate for this space, we make big investments in it, because we still have a bit to go. But that being said, I mean, look at BlackRock now, look at JP Morgan
Mm,
with its Onyx blockchain, and many investments in the space. So I think we are moving in the right direction, but I'm not a strong advocate for going head first, not doing your due
Mm,
diligence,
sure.
spending a lot of money on things that are, rug pulls or meme coins or
yeah,
whatnot.
yeah.
I think it is actually okay to double check and turn a few pages, back and forth a few times,
Mhm.
to make sure that the general public is protected from situations where they don't have the full information because they just can't.
Yeah, and I'm glad you brought up some of the stuff around BlackRock, and in my mind, sometimes the hypocrisy that, at the high level, they'd be saying, these things are dead, they're never going to come to light. And, on the side, they'd be investing in companies, not directly investing in say, cryptocurrencies themselves, but they'd be investing in companies that are based on cryptocurrencies, all this kind of stuff. And now we're seeing that more and more they are starting to advocate for these things. But I think, a big part of that, like you said, is around the regulation. And it's always the way, right? Regulation's always playing catch up with technology, and it's never going to be there for the early adopters. But hopefully, governments seem to be taking note and slowly moving towards regulation. The whole thing with the SEC, right? It's quite entertaining to an extent, worrying also to an extent, but it seems like they are slowly getting to grips with things. And this kind of relates me to my next question on challenges or maybe even opportunities for Web3 that's related to regulation as well, is around AI. How do you see, we kind of mentioned it earlier, how do you see AI affecting Web3 and vice versa, or Web3 affecting AI right now? You mentioned the hype cycle things, but what do you think, short term and even long term?
So I think, there's many ways you could answer this question, but the way that I would answer it is, I think that artificial intelligence creates a lot of shortcuts, right? And therefore enables a lot of movement. For example, it's getting quite good at creating code or finding issues in code, or helping even with, marketing aspects, etc., etc. But just focusing on the code as the example, all of a sudden things can be developed much faster. Developers that are very expensive, and very few of them that are senior in a lot of the blockchain programming languages, now, or will be, we are moving towards, I think, in a place where a lot of those extra people can be replaced through AI, because the AI can actually finish some of the code, or untangle some of the code, or review some of the code that previously, only really a relatively small amount of people can actually do / read / improve. So that, I think, creates pros and cons. The pros, of course, being things can deploy it faster. You need less manpower to create blockchain related infrastructure, which is the underlying infrastructure powering the Web3, etc., as well as, of course, applications on top. But it also has the issue that it creates more intransparency. So, in my opinion, the decentralized net, or Web3, the beauty about it is that it's so transparent, and it's so open, and it's decentralized, and everyone can have a say, and everybody can point out what you're doing is not right, right? And like here, we need to make sure that exploitation doesn't happen, for example. Or I want to have a say. I don't think we should be doing this. I think we should be doing that, right? And then that's the beauty of a lot of it, and in the philosophical way of looking at it. But of course, once you start having AI writing and code, or impacting information that is seen as transparent or correct, for example, in terms of like oracles, right now taking static data from off chain and putting it on chain, all of those moving parts, if they're infiltrated by AI that is seen as the truth, right? And the code is seen as correct, but AI is a black box, right? Artificial intelligence is created through algorithms, and the algorithms are fed with data, and the data is then, and these algorithms learn, and then they spit out kind of information in the end, let's say, right? And we don't really know this algorithm. We can't really see what's happening there. And a lot of the time, we don't know what data comes into this algorithm. So we don't often know what the answer that it spits out, that it's really the truth, right? Or that it's really non-biased, let's say. And that's quite hard to get right. So any little kind of bug or problem that can be kind of put into the code, because the AI somehow creates this, and I'm obviously, this is a very niche example, but I'm saying that there can be now new ways of making a very transparent or should be very transparent thing into something very intransparent potentially, because we're using AI to kind of fill in some of the gaps. Um, of course, you can argue a human can also program them in, right? But open source code, et cetera,
Yeah.
et cetera. So I think we're just we're creating a few more open doors for potential, malfunctions or problems,
Yeah.
black box of information, and that's a little bit worrying to me. But in essence, I do think that there is a bit of an overlap, right? AI to be used
Mm.
for movement and development of the Web3 space in general, as well as maybe even popularity, right? A good written marketing copy from an AI robot is better than any marketing copy I've ever written. So,
Yeah, I mean, so I think the genie is out of the bottle with AI, right? Like it's kind of all the issues that you've just mentioned around not knowing, what data sets are feeding the algorithms and how things are computed and all the errors that could occur and misinformation, all these terrible things. It's kind of, in some ways, it's inevitable and it's kind of already happened because people are accessing this right now. And we're already seeing that ChatGPT, like the accuracy of ChatGPT is already degrading massively because of all the input data and incorrect data sets that are now being used on a daily basis to correct it. I guess in the episode we were talking about AI and Web3 and the overlap, we saw a lot of benefits of Web3 being used to kind of safeguard AI. For example, how do you know that your data is being used in a certain way? You apply Web3 principles, data sovereignty, all this kind of stuff. So you can
mhm.
consent to how the AI is actually using your data, for example. Have you seen many companies? We've talked that AI and Web3 kind of technology developers, all these kind of things, they've worked in kind of isolation for a long time. And it's only really been in the last 5 years maybe that we've started to see overlap between these two disparate fields. Have you seen many startups? Have you invested in any startups that are starting to kind of bring these two principles together and realize values from AI and Web3 in the other one?
I mean, you could argue that, OpenAI, now with WorldCoin,
Mm,
has a clear overlap because the same CEO or leader
yeah.
is running or the figurehead of both of these projects. One of them being a let's say blockchain Web3 project,
Mm,
and one of them being a AI project, the company behind the AI project that we
yeah.
Mm.
all know, right? So that's just as a really, I mean, clear example. But in terms of what we see, honestly, um, not as much.
Mhm.
We see a lot of ZK machine learning related
Mm,
like research
yeah.
and projects being um, powered by, thought about. I've recently been to a hackathon where I think three of the groups were all, so clever people or filled with such clever
Mm.
people talking about zero knowledge machine learning and
Mhm.
how this can help with, a data storage and data efficiency creation and whatnot, way over my head because I'm not a computer scientist. But that was fascinating to see, right? How already there's in the developer or in the more technical engineering space, how this so many principles or building blocks are kind of starting to be combined. A lot
Mm,
of it's also buzz, right? But
yeah.
still being combined to now think, okay, what can we do with that? Can we make things even more efficient, even more scalable?
Mm.
It can faster, whatever it may be. Um, from our project, I mean, one of our projects in the portfolio, they're actually using also I guess zero knowledge proofs
Mm,
to verify workflows. So, for example, when a company says, we do this, and this process, they can use cryptography to verify that this is actually what happens with, for example, data, which
mm,
then is also valuable for potentially using it for AI uh, data. So, what data is fed
Mm.
into the algorithm,
mm,
kind of proving that the sources are not biased or that they are really what the company says they are feeding the algorithm with.
Yeah.
So that's an interesting one because it's cryptography that essentially creates a statement or a proof or an audit, let's say, of data that's being fed with a kind of proof on the blockchain, right?
Yeah.
So that companies, or even in terms of being able to say, I don't know, uh, this algorithm is not changed for a certain
Yeah.
amount of time or whatever it may be. But I think these are early days. Otherwise, we've really, in our portfolio at least, I haven't seen that much AI overlap. But I also have to say, sometimes when companies tell me like, we are a um, AI, we use AI to generate recommendations for I don't know, influencers and their backgrounds and what people want to see. And then the influencers get remunerated through crypto when they join our social app. And
All
I'm
the
like,
buzzwords.
wow, that sounds phenomenal. But why would somebody really use this? Like, okay, they get recommendations and then they get paid because they have viewers, but do you need Web3 for this, right? Do you need blockchain for this? Do you need AI for this? Or, is it good customer research and a loyalty point system? So I think that's where I'm sometimes a bit skeptical because
Yeah.
we get thrown at as VCs, a lot of these buzzwords. Whereas a lot of the time I ask the founders, do you actually need this
Yeah.
technology for it? Or is this really something you can use Web2 mechanisms for?
Yeah.
And what good does the AI do for you? Because a lot of the time it's just kind of forking or taking data from ChatGPT, which then again, how innovative really is that? And I think that's a big question mark we still
Yeah.
need to figure out.
I love that approach so much because you completely see it all the time. People will just say blockchain or Web3, and you'll be like, okay, I see that you're using it, but what's the actual benefit to the user? Why does the user care? And I think generally this has been an issue with Web3. The benefits to users are quite intangible. And like we said, I think this is why AI has kind of boomed because the
Yeah.
benefits to ChatGPT are very tangible. And I think this is something the industry really is hopefully moving their focus towards is how do users benefit from Web3? And I think that's kind of what excites me, hopefully, is that we are seeing that user centricity.
What do you guys think? Like, what's your take? I mean, you've had people talking about AI. You have me now talking a little bit about venture capital and Web3. What's your thoughts on the overlap and maybe even the overall industry in Web3? Are you bullish? Are you bearish? From all the knowledge you've gathered and the chats you've had, where do you stand at the moment?
Yeah, I mean, it's a good question. I definitely would also just on the last point, you made, people have often talked about blockchain as kind of being a hammer looking for a nail, right? For many, many years. And it's something people will keep saying is a solution, but to which problem? And I think, yeah, I'm very bullish in general on Web3 in terms of the underlying technology. I do very much see it as an enabler for lots of the things that we'd like to solve in terms of what challenges we have with the internet. I personally think the most exciting area is in micropayments, is in all the different incentive mechanisms we can have around micropayments. I think a lot of the problems, if you just think about the consumer and how the general person uses the internet, most of the problems with that tend to be around being on social media, having to look at advertising all the time, your data being sold, seeing all these Twitter bots or X bots as they're now called.
Mm.
These kind of things are all things where micropayments and Web3 infrastructure, like digital identity that you mentioned, I think these are the exact tools we need. And again, you're talking about zero knowledge proof. I saw you also were invested in a company doing multi-party computation, right? There are some really interesting, these are really advanced concepts in cryptography that can be used to achieve some incredible things for users, like the types of things you can prove and preserve your privacy at the end of the day. That's what they're really allowing you to do is phenomenal. It's almost like magic, right? A lot of these things. But I think at the moment, yeah, we're still in that phase where the promise is very large and we need to see consumer level applications really scale, take off. We need to see a Web3 application have its chat GPT moment, I think, before we really know it's gonna make it.
Yeah, I think you stole my answer because I think micropayments is one of the most exciting things.
Mhm.
But just to give another answer, because we're talking about AI a lot, I think, like I said, Genie is at the bottom with AI. It's gonna reach the mass. It's already reaching the masses right now, right? I think that it's going to come into our lives every single day. I think everyone's going to experience some form of ChatGPT in the Western world on a daily basis. I use it regularly right now, and I think that because this rocket has taken off, I don't think people are really seeing what the risks are. Say maybe the kind of the users of it right now are seeing what the potential risks are. But I think we're going to realize this. I think a lot of issues we're going to experience will be around deepfakes, about misinformation, and the bar of quality of deepfakes will be raised significantly, and it's going to be really hard to control this. And the most obvious application of blockchain to that is around provenance, is around linking, the content that's created using zero knowledge proof, the technology that we've been speaking about a fair bit now, to the original creator of that, and proving intrinsically that something is from that creator or isn't from that creator. And that doesn't, like I've said in the previous episode, mean it has to all be human. We can have AI, bots that are actually beneficial and people want to follow them. But it's all about ensuring provenance and an actual genuine link to the creator. And I think, yeah, I'm really excited about how Web3 can be applied to AI. And there's lots of other things like payment rails that I get quite excited about, and like proving data inputs and all this kind of stuff. But yeah, that's what I think is most exciting for me.
Yeah, I
Yeah,
love your
Mona,
answer.
what are you most excited for, Mona? I'm curious because you kind of you've mentioned so many different fields and you've got your professional hat on, but maybe what is there something that you're especially excited for in Web3?
Honestly, I really love your answers because I think that it's very it's very true. I agree with you, right, with both of you, what you've said. And I am excited that I think what what we will see is a lot of the emerging markets as well being able to use um crypto or blockchain payment rails for making their lives much better, much easier, and providing a lot of opportunities for emerging markets to make new income, participate in like, let's say, more financial services related economies that are have more money, or have more investment opportunities, also quicker settlement, being able to participate in the world a little bit more for their creations, maybe in terms of whatever they
Hmm.
craft. Um, and so I think that that's going to be, I think that's a very can be a very, very positive catalyst for making the world a little bit more equal. This banking the unbanked was really this phrase was really the reason why I decided or wanted to dedicate my time and commitment fully to this space, and also be a very hopefully seen as a very collaborative player in the space. And I think that's really exciting. I also think that blockchain technology can power so many exciting things for us,
Mm,
and making them more accessible in terms of UX UI, so being more user friendly,
mm.
is also something I'm quite excited about. We need to overcome this. Everything in the Web3 space is only made for crypto native people,
Yeah.
and it's only made for techie people. And even the dashboards I'm shown now, for example, DeFi related um, projects or opportunities, even those dashboards, they're really complicated, right? And the founders tell me, oh, but this is so much easier than XYZ opportunity out there in the market. And you're like, yes, but it's so much easier because we're used to really hard, right? The general public is used to very easy, one button kind of click situation from bank
Mm.
account. And so I think I'm quite excited about not just the infrastructure, because I think we still have many problems here: interoperability, scalability, just to name a few, security. Really, really, we still have a lot of problems to solve in just the base layer infrastructure of
Mm.
the new era of the internet. But I'm also excited about the applications that are then being built, or also simultaneously built and developed, to make them more user friendly, so that we all can start participating from this technology to make our lives a lot more efficient and effective and more fair.
Well, that was a great answer. I think, yeah, we are coming to the end of our show. I think your insight has been great. It's definitely been a different perspective from what me and Jack have, a lot more kind of business focused, but that's good because it makes it much more tangible and you're far more well, you obviously understand the technology quite deeply as well, but it seems like you have a focus towards users, which I think the space is really missing right now and needs. And I think, we need people like you in the space, and it's quite exciting to speak to you about it. So we have our last section. We want to ask you a couple of questions, which we ask all our guests. I'd be very interested to see your answers. So the first question that I have for you is, in one sentence, what is Web3 to you?
Web3 to me is the new era or the future of the internet as we know it, which means you can also own your data rather than big tech giants owning your data.
That was good. That was concise.
Perfect.
Usually we have like people giving 20-line answers, including me and Jack. So that was nice. The second question I have is, if you could choose anyone, dead or alive, to sit down and discuss Web3 with, who would it be and why?
I mean, you're gonna get a really boring answer here, but it's a true answer. I would like to sit with whoever or whichever group or whoever Satoshi Nakamoto is, as well as Vitalik Buterin, who is obviously alive and a very big driving force in this space. So for those who don't know, basically the white paper writer of the Bitcoin network, as well as the, let's say, one of the founders and figureheads of the Ethereum network. And I would like to discuss with them what they honestly see right now. Has it developed the way that they've envisioned it when they started being geniuses in this space, and where do they see it going, and what do they think those who are not them can do to portray and move this forward in the right direction. And I would love to see the debate between the two viewpoints. Of course, that is something that you can argue. We do see, and you follow crypto Twitter, and you follow opinions of thought leaders in the space. But it would be a phenomenal dinner, I'm sure.
It's another great answer. So thank you for joining us, Mona, and thank you to those listening wherever you may be. And join us next time as we untangle a little more of Web3. Thanks for tuning in to another episode of Untangling Web3, produced by Emma Camilleri.
Don't forget to send us your thoughts, questions, and comments on social media, and be sure to follow us on your favourite podcast provider to catch the next episode. See you next time to untangle a little bit more of Web3.
The views we express here are our own and do not reflect the views of our employers.